Welcome back to another episode. Today we are taking a moment to discuss de-dollarization, what the BRICS countries just declared at Johannesburg, and what it means for gold bugs and the US dollar. Before we begin, please take a moment to like and subscribe. Keep the channel going strong. Thank you. If you haven't been keeping up to date on what de-dollarization is or who is part of the BRICS coalition, here's a quick recap. BRICS is comprised of Brazil, Russia, India, China, and South Africa. They're a coalition of countries that have banded together to realign the global world order and shift power away from the US and the G7 countries. De-dollarization is a reference to the trend of countries deciding not to use the dollar for trade. The dollar has been the reserve currency since the end of World War II, and de-dollarization would benefit a number of countries around the world by strengthening their currencies. For many months now, de-dollarization has been in the news, with pundits reporting both sides of the issue. And for many of us in the precious metals industry, we've been intrigued by this discussion for two reasons. First, the BRICS nations were rumored to be creating their own currency, backed by a basket of commodities, including gold. Second, the advent of de-dollarization would likely weaken the dollar. When the dollar weakens, we tend to see gold prices rise, as there is an inverse correlation between the greenback and gold prices. So with that in mind, we've been watching very closely to see what happens next. Now, this is a topic that's a bit difficult to cover for a few reasons. Now, first, the BRICS countries are not perfectly aligned, and they all speak different languages. Coverage of their intentions, their speeches, it's all subject to interpretation. And one of the key points of interest for us was whether or not a BRICS currency backed by gold would come into existence. Well, Russia has publicly stated they would be making a currency, while others in the BRICS coalition have said that no one has tabled the issue of a BRICS currency. Sometimes these conflicting statements are released within days of each other. Brazil, for example, has released public statements more aligned with Russia, saying, "The creation of a currency for trade and investment transactions between BRICS members increases our payment options and reduces our vulnerabilities." Meanwhile, India has stated they are more interested in strengthening the rupee rather than creating a new currency. Divided though they are on the creation of a new currency, the bloc met in Johannesburg and formally called on members to abandon the US dollar for global trade settlements moving forward. Members have agreed to continue promoting their native currencies, and we can be certain that bilateral trade agreements with other countries will be reworked with this end goal in mind. It's important to bear in mind that the creation of a new currency is not the only manner in which dollar dominance could be brought to an end. Another method, one of creating a multipolar world for trade where many currencies are utilized, is possible, especially in an era where most currency is digitized anyway. In addition, one of the main ingredients to the dollar's dominance is the petrodollar agreement, in which the Saudis agreed to only sell oil for dollars. Now, since the world runs on oil, this guaranteed countries would always have a way to spend any dollars they acquired. And with that guarantee in mind, many other customs and trade agreements were created. However, if the petrodollar agreement goes away, it threatens the dollar's hegemony. Now, one of the items on the agenda in Johannesburg was coming to an agreement on the mechanisms for expanding membership. Iran, the United Arab Emirates, Argentina, Egypt, Ethiopia, and Saudi Arabia were all invited to join BRICS in late August. The Saudis have previously said they would consider selling oil in exchange for other currencies than the dollar. All of these countries are oil-producing nations. Now, the news on this is moving quickly, and there will no doubt be more updates between the time this is filmed and the time it's published. At present, the most recent news is that the UAE officially struck a deal with India to settle an oil trade for 1 million barrels of oil in rupees. This is a landmark deal, and more are sure to follow soon. So what does this mean for us? There are multiple scenarios that could unfold. One likely scenario: if the dollar weakens due to de-dollarization, it affects the price of imports by driving up the price of raw materials and finished goods. Inflation would follow, affecting real interest rates. Gold prices would be expected to rise initially in this scenario, assuming that prior correlations hold. And this would be expected until we see a response from the Fed, whose policies can have large impacts on the economy and gold prices. The Fed is somewhat limited in the tools they have, and it would be unsurprising to see them raise the Fed funds rate to combat inflation, which would in turn strengthen the dollar. Gold prices may falter in response. There would likely be some seesaw action on gold prices as broader macroeconomic trends emerge if the BRICS coalition is successful at establishing new norms in the global world order. This is one potential scenario in a de-dollarized world, but it's not the only potential outcome. And we hope this paints a clear picture as to just how complex these intertwined systems can be. Now, prognostication aside, it's clear the US's dominance is under threat. Regardless of whether that threat materializes or dissipates over time, it will cause some instability. And anytime we see instability in established institutions, gold tends to perform well. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.